While trading in the stock market, derivatives, equities, it doesn't matter. You need to get good at making adjustments intraday so that you can come out the day profitable. It is known around the Discord, around the trading community, I don't have red days. I've been asked to explain how is it possible not to have red days. The fact of the matter is it requires a lot of discipline and strategy. I'm going to talk about one thing, adjustments now. What intraday adjustments should a trader make in order to come out the day for 6 figures, to come out the month, the week, your year for high profits? Let's talk about it. KD for the Wealth Wells. Are you ready? Let's go. So what adjustments should you be making to hit 6, 7 figures in a year? If you're trying to get to 5 figures, if you're trying to get to 4 figures or 3 figures a day, it doesn't matter. You're trying to come out the day profitable. What adjustments should you be making in your trading style to crush the market? KD for the Wealth Wells. I don't use lagging indicators. I don't use supply and demand. I don't use any patterns, all that mumbo jumbo. I use a system called VVP. This system helps me to pay attention and dial into the market so that I can read volume, volatility, price action to find areas in the market where I need to make adjustments. Now, you're going to have to focus. All right, so let's get the preliminaries out the way. All right, you need to be dialed in if you're going to trade at this level. You can't be distracted. You can't have people, calling you and checking other things. You need to respect the market if you want to be profitable every single day. All right, so I have a book that's dropping at the end of the month, How to Day Trade with a Full-Time Job. Quite frankly, anyone can use the tips in this book because it talks about your environment. It talks about skills, setups, tips, tricks, things I have used for many years to be successful while day trading. That's a unique challenge when you have a full-time job. But I believe the best practices can transfer to anyone. So one of the things you need to get good at is adjusting. Now, most traders don't adjust fast enough, which is why that trade kind of gets away from you, or you get clipped, or you can't get out your rut. It's because no one taught you how to adjust. So let's talk about 3 things you can do. I'm going to give you 3 tips, 3 adjustments you need to be making intraday, throughout the day, in order to adjust to come out the day green. All right, number 3, you need to get good at understanding when to read the volume to adjust your holds. All right, volume is going to tell you how to adjust your holds. All right, let's look at Friday's action right here. Okay, if we look at the top side of the day here, we clearly get a nice clean dump. Just look at the behavior of the candles here. Look at the price action. We're going to a target in my weekly prep. If you watched that from last week, 4264 area, we expected liquidity. All right, so after you come off of that area, in this area, really this area right here, you are going to have sufficient volume. All right, but once the volume drops off and you come into perhaps a lower time frame or a chippy area, you should be able to read the volume, look at the price action. You'll pay attention to the volume at the bottom of the screen, and this should adjust your holds. All right, so step number 3, all right, you need to be able to read the volume and let it tell you, hey, my holds should be shorter. Why is that important? It's important because you will be able to reduce your risk and your expectations for the trade for the time it gets into profit, right? So I teach traders how to track their T2T, TIT, that's your time to target, time in trade. And what that does is on average, it tells you where you are, your frequency, how good you are at holding and where you're going to your level, right? So if you know you're coming into a low volume time frame, you should adjust your time in trade. You should adjust it so that, you know what? I'm not holding this trade longer because I could get a nasty wick, a whipsaw, or whatever the case is. That's the first step. Number 3, volume. Read the volume to adjust holds. That's the adjustment you need to be making. Number 2, contract size for risk. All right, so the same applies. If you normally have a contract size of say 1 or 5 or 10 or whatever the case is, and you're trading the top side of the day, or maybe you're trading the afternoon action there toward the close, you have sufficient volume. Well, if you are working and you maybe can't trade the top side of the day or the back side, and you're getting in the low volume time frames in the middle of the day, and that's the only time you can trade, you're going to need to be able to understand, I've got to step my contract size down, which would impact my risk, right? So risk simply means how much you are willing to put into a trade and what you're doing to protect yourself, right? Risk is associated not just with the capital that you have put in there, but it's also associated with the behaviors and measures you have in place. So in this example, we'll go back to this low volume area where we can clearly see the market is pinned here, right? Whipping and kind of just pinned to the POC. All right. Well, once you see this level, because you've applied step one, you understand volume for your holds. Now you know you're not going to be in your trade that long. Well, you're also going to step your contract size down. So if you're trading 2, go to 1. If you're trading 10, go to 5. Whatever the case is, that's going to protect you, which means you're going to need to kind of grip your emotions. You're going to need to be okay and content with lower profits, but a successful trade, right? Success in the market is not measured by the money. It's measured by how many trades you execute properly. The money's the byproduct of that, all right? So you need to make sure that you are adjusting your contract size throughout the day based on the session and or volume that you're reading. You need to also understand you need to be able to adjust your holds based on the volume that you're reading. The number one adjustment that you should be able to make throughout the day, and I do this a lot, so listen carefully, all right? Those who trade with me live inside the Discord know that I do this all the time, and I have been asked to explain it, so I'm going to do it now. Everyone wants to know, KD, well, when is it appropriate to trade options or futures or equities? I'm going to give it to you straight, all right? The number one adjustment is the ticker. Adjust the ticker you trade for movement. Now, it's no secret. I focus on the S&P, all right? I have multiple options within the S&P to trade, all right? Now, if you only focus on, we'll say, Tesla, I'm only picking on Tesla because it took a whopping 15% dump over the last year, so right? I'm only picking on Tesla because it's Tesla. But let's say you just focus on Tesla. You are subject to the ebbs and flows, the ups and downs of Tesla and only Tesla, and when it ain't performing well, you do not have another like stock that you can use your newly defined skills against. But if you're trading in the S&P, if you come into the Wealth Wells and you take my training and you understand how to trade, then you will have a number of setups across multiple tickers. So for example, if I'm trading in the market and I get this type of behavior here, right? This type of behavior right here, right? And let's say I'm pinned to the POC. Well, typically, the overall market will be pinned as well. However, there could be more liquidity over in SPX, and I can trade options at that time. Well, let's say SPX is chipping around. It's being pinned, right? And I want more incremental movements. Well, I could come over to ES. I can drop down to the 3, and I can scalp ticks or in between or points, smaller moves, and still get very nice profits. So the number one adjustment you should be making is the ticker and looking for the movement so that you can gain profits in the market. So let's recap. These are 3 intraday adjustments every successful trader needs to understand and learn how to make. Number 3, reading volume to adjust your holds. Number 2, contract size to adjust your risk. And number 1, the ticker so that you can adjust for the movement in the underlying stock. All right. So listen, every single day we are live inside the Discord right here, crushing this thing inside the main channel. And man, we had a monster week last week, over 100K earned. I want you to watch this video so you can learn what we did, what we said. We also discussed our trade thesis and how we got those incredible moves. And then there's a couple things that you need to do. When you come into the Discord, I want you to spend time reading the testimonials, real people, real results. I mean, people leaving them every single day. Here's one last person. Hey, I have only been here a week and a half. Loving it so far. If you're thinking about joining, quit thinking, sign up. Made the killer Wells fee in 2 minutes on the second trade. He's talking about those banger trades we have for Friday. Now, if you want to understand how to trade this way, I've got coursework here for you to take. You can join Tier 3 here. You can jump into the Cool Kids Club where I have private channels for swings, futures, trade discussions. I post my levels and thesis every single day. And man, we go to the bank. I also show you line by line We track all of my trades are live and recorded, and I post the end of week recap here and on YouTube so you can see all of that. Had you just taken just one contract with me, you'd be banking throughout the week. So what should you do? Boom, click the link down below, get the training that you need to crush this thing and take your trading to the next level. This is KD for the Wealth Wells, signing out.